Canadian-based Mandalay Resources has producing assets in Australia and Sweden. Focused on gold and antimony, as well as production growth and cash flow, CEO Frazer Bourchier joins me here in studio to give us an update on the company's growth and financials. Frazer, thanks so much for being here.
Karina, thanks for asking me to come.
All right, now to get started, you recently reported your Q3 production results. What are some of the highlights to date?
Oh, look, it was another great quarter. We produced over 20,000 ounces of gold equivalent. We now have $55 million of cash in the bank. All reference to dollars are US dollars. Zero debt. And we're on target to meet our guidance of 90 to 100,000 ounces this year.
All right, well, cash flow is a focus. So tell us about Mandalay's cash flow story with $55 million in hand.
Look, with the two assets we have, we generate free cash flow close to $4 to $5 million every month, which is fantastic for us for a relatively small company. That continues to build. We've been able to clean up our entire revolver debt facility, $35 million available. That's now nothing drawn on there. And we have this stockpile of 55, which we think will grow to close to 70, if not more, by the end of this year.
Okay, then how does that play into the goal of being debt-free, or are you already debt-free?
Yeah, clearly already debt-free. However, I mean, we didn't start that way. We're now debt-free. We're piling up cash for a, $240 million US market cap company. 25% of our market cap is in cash. But we also want to further increase that stockpile. We see a use of proceeds of growing our mine life, resources, and in the event of an acquisition, investing further in a larger pro forma company.
Okay, now can you give us a brief explanation of antimony and its benefit as a mineral to the company's portfolio?
Yes, antimony, look, not very well known. It is on the periodic table of elements, but it's been around for a while. It is classified as a critical mineral, a rather interesting one. Half of its use is usually in flame retardants, as in high-end flame retardants, not the type you'd use in your house, but the type used on an airplane or something. But it's also got a significant growing use, not only in solid-state batteries, but in solar panels to remove the air bubbles in there. And that demand has just driven the price up in addition to recent export restrictions out of China. So having antimony, we are the largest producer of antimony in the Western world. That's not because we produce a lot. It's just that shows most of it, 85% of it's in China, Tajikistan, or Russia. So having that ability to produce a critical mineral that's highly sought after, the price has more than doubled in the last month, or the last 3 months, in fact. And it adds nicely to our bottom line at our mine in Australia.
All right, now let's dive into your projects. First, the one in Australia, Costerfield, has multiple targets. What has been the most significant from that project at this point?
Well, look, Costerfield, we've had that in our portfolio for probably close to 15 years. The mine life, the way the ore body's set up, it always varies between 2 years to 5 years, but it's been doing that for the last 15 years. It's the nature of the ore body. It's a very high margin asset, high grade, one of the highest grade mines we have. While it's not a big throughput, we can generate about 50,000 ounces a year there, equivalent, similar to what we do in Sweden. But we can generate 40 to 70 million free cash flow a year there because of the margins. So it's a great asset, and we have near mine targets, Cuffley Deeps we talk about, and Shepherd, and regional targets, especially True Blue. So we're excited about more exploration dollars, 10 million a year at least, and continuing that asset on a, let's say between a 2 to 5 year mine life.
All right, now let's move to your mine in Sweden. What is the estimated mine life, and how does that benefit your bottom line?
Yeah, the mine life in Sweden is actually a pretty decent size. It's like 9 years. Again, we've had that asset for 10 years. We've continually replaced resources there, so it's always been an 8 to 10 year mine life. It's a bit different than Costerfield in the sense that it's 10 times as large, but it's about 1/10 the grade. So it's a slightly lower margin asset. But again, we can generate 15 to 20 million, 25 million a year free cash flow. It's a massive system. It's got over 3,000 veins. We think that'll go on forever. The issue is targeting the higher grade portions of that ore body in Sweden.
And how do you do that when you're looking to sort of target those areas?
It's a combination of both our infill drilling and other exploration efforts that we make. We have a large array of ore bodies to choose from, so to speak, both above the marble unit, we call it, and below the marble unit. But it's a matter of making sure we get our development in place and getting more development so we have more working stopes and faces that we can access that give us that flexibility.
All right. Now, what are the main points that are positioning the company as a mid-tier producer?
Look, we believe there is a strong need to grow and consolidate within this industry. There are a lot of smaller producers. You know, the nice thing about being a producer is we're generating cash. It's a great platform. We have no debt. We have no encumbrances. We have no royalties. We have no streams. But we produce approximately 100,000 ounces a year. And size and scale matter in this industry. And having extra diversity in terms of multiple assets and even multiple commodities, although gold is our main focus, but add in antimony, we think that gives us a chance to consolidate, combine with other like partners, get index listed like on the JDXJ, access to capital markets makes it easier, more trading liquidity. So that's a path we're going down to try and consolidate and do sort of at-market combinations.
Okay, and where are you on your growth strategy?
Well, I would say we're probably a quarter to halfway there. So I came in 18 months ago, assessed the operations. We stabilized them or continue to stabilize them. We've replaced resources and reserve growth. We've cleaned up our debt. We've built up a cash profile, and we've engaged with a number of like parties to see if they share the same vision as us to move into that mid-tier producer status. You know, the great thing is we don't have any builds either, so there's no big capital risk in front of us. It's really about adding to that production profile and generating more cash.
All right. Now, in your corporate deck, you have a strong values-based statement focusing on sustainability. What are some of the things that are most important to Mandalay?
Look, for us, even though we're in Tier 1 jurisdictions, the ESG component is critically important. That starts with, I would argue, our employees and valuing and listening to and, you know, acknowledging their contribution. But in addition to contribution and engagement with the local communities, we have very engaged and supportive communities, both within the state of Victoria and Australia. We're about 1 hour north of Melbourne. And in Skellefteå, which is about 1 hour flight north of Stockholm in Sweden. So that engagement, in addition to relationships with, you know, contractors, suppliers. Our mine, by the way, in Sweden is a pretty green mine. I mean, it's all hydro power generated that supplies the mine. So it's a very, you know, green, sustainable, cheap form of power. And that's really a path we go down in terms of both employees, community, and power generation.
All right. And is there anything else you'd like to add?
Look, I mean, I think our story, we are small, we admit that, but we are growing. We are diversified in terms of multi-asset. We're in Tier 1 jurisdictions. We're diversified in terms of multi-commodity, mainly gold, but also antimony, a critical mineral. We've got zero debt. We're accruing cash. We're very focused on continuing to replace reserves that we produce, but also doing combinations, consolidating, getting size and scale, and moving upwards. So we're quite excited about that.
All right, well, thank you so much, Frazer. This is Frazer Bourchier. He's the CEO of Mandalay Resources, which trades on the TSX under the symbol MND. You can also find out more at mandalayresources.com. From our downtown studio here in Vancouver, I'm Karina Robertson.